Focusing back to the real estate space, which grapples with demand, liquidity and regulatory hurdles, the only listed real estate investment trust in India is delivering stellar returns to its investors. Sharad Dubey is standing by with the possible reasons for this rally in Embassy REIT. Sharad.
Yeah, Devina, I think the first thing we need to understand is REIT and equity both are different asset classes, first of all. And this was the first REIT which was listed in the March 29th. It listed with a premium gains of almost 2.7%, and it's treated as per unit. So it came at around 308 rupees per odd unit. Now, if we take the returns, if we see from March 29 till date, it has risen almost 33%, outperforming its Realty peers. Even the Nifty Realty Index, which saw a cut of almost 1.4%, while Brigade, Prestige, and Godrej Properties grew between 16 to 17%. As they go into affordable housing segment, also they are venturing in, and also these companies have exposure in the commercial properties. Apart from this, there was not so much movement in Phoenix Mills and Oberoi Realty, which rose around 2 to 8%. But deep cuts we saw for DLF and Indiabulls Real Estate, the stocks falling almost 20% to 30% from March 29 till date this year. Now if you focus, for the REIT space, now we see that the group has almost 2.4 million square foot of commercial assets, going into FY23. So when we also had a chat with management and they spoke about this, that this actually gives a good kind of a strong revenue visibility, which actually brings us to the marquee projects which we see, which will be completed by next year. So there are two projects, which I like to point out. The first one being the Embassy Oxygen Noida, which is having a 0.6 million square foot area of commercial space, which is expected to be completed by December this year. And also there is an important tenant, MetLife Insurance, which has taken almost 42% of the space already. Apart from this, we see Embassy Manyata in Bangalore, which is also having a 0.8 million square feet of commercial space and is expected to be completed by March next year. The REIT space is also, REIT is also having its hotel segment, and in which they expect almost 70% occupancy, going at its 4 seasons at Embassy One in Bengaluru by FY23. Apart from this, we see the dividend yield. Now, basically, an REIT gives out dividend as per SEBI's norms. It gives out almost once in 6 months, but the management spoke to us and they told that they're going to give a dividend almost each quarter. So the expected dividend yield for Embassy Office Parks REIT, for FY20 and 21 stands between 6.1 to 6.6%. But while for DLF, Prestige Estates, and Phoenix Mills, who have a considerable commercial exposure, for them the dividend yield ranges around 0.5 to 1.4%. Apart from this, now we see the estimates for the revenue as well as the EBITDA. So basically, when an REIT earns a revenue, it's through the lease rentals. And apart from this, if we see these lease rentals have escalation clauses, and each year they grow by almost 5 to 15% between 3 to 5 years. And apart from this, there is a lease expiry as well, which actually aids, into increase in the mark to market, to renew their leases. Now we see the revenues, we see there's a 15% compounded growth, estimates for FY19 to 21, while for DLF it is negative, and for Prestige Estates, Phoenix Mills, Indiabulls Real Estate, the revenue compounded growth averages between 9 to 11%. In terms of EBITDA also, the Embassy Office Parks, REITs, stands at almost 19% of compounded growth for EBITDA, while for DLF, Prestige Estates, Phoenix Mills, it ranges between 9 to 14%, and Indiabulls Real Estate comes in at a very lowly 1% EBITDA compounded growth rate. So, Devina, these are the factors, moving in the REIT space. And it's a very new kind of instrument, so that is something which we will be watching out for. And a lot of business groups, even including K. Raheja Group and even Godrej Properties, are showing, like a kind of an enthusiasm to go into, this REIT space. And this is roughly around $10 billion space.
This also gives you the backdrop, Astri, and you pointed it out, that commercial space, the commercial real estate as a pocket has been doing really well. And, I was looking at an Edelweiss report which suggested that the vacancies have been on a downward trend since the last 5 years, I think, where in million square feet, it was about 33 odd million square feet in terms of vacancies. That's come down to about 15 million square feet. Rentals have gone up by 40-50% for commercial space in Bengaluru. In Hyderabad, they've gone up by about 50%. 50-odd%. So this probably gives that additional boost to REITs as
Yes,
well.
it does. And actually, I would like to just add one more thing, in that absorptions are also actually at a rise. It's almost 25 million square foot of commercial space is getting absorbed. And if you see, a strong traction is being seen in Bangalore, Central Business District of Gurgaon, and even, in Hyderabad. So these 4-5 top metro cities are having, top A grade REIT-able assets, which actually augurs well, for MNCs coming in. So, Devina, I think REITs are in a sweet spot.
And there's one more scheduled to come out, I believe.
Yes, by 2021 it is supposed to come out. That's what it's our story which we have published. So, we can definitely see that on the website.
All right. Sharad, thanks very much for that.